going on, Juju Gang? Happy Sunday morning, 9:30. I know it's a little bit early, but I had something to do that is going to take up my 11 a.m. slot. But I appreciate you guys tuning in for another Tesla weekend power hour stream, getting ready for the week ahead. Man, we got a lot to talk about. Although I made my post-earnings video, on Friday or on Thursday, I feel like there's a lot for us to catch up on that I can actually use my screen for, share my screen. I'm going to go through a couple of exciting things, I think, on this stream. One thing is going to be I'm going to go through my back of the napkin Tesla model and see how that's changed post-earnings. And if it does, let's stress test it to see what assumptions we have wrong or what assumptions we could make correct further. We're going to go through a couple CNBC videos, Yahoo Finance videos. Kathy Wood has a new price target for ARK Invest, so we want to definitely talk about that. And then we got some news also that I do want to share about Morgan Stanley, some notes there, the Model Y and how it became a bestseller status, and then some general car stats that are coming up for this month that everyone may want to see. So let's go around and let's see. And by the way, let me know if my audio is coming in clear in the chat. Let me know where you guys are tuning in from, city, state, country. Let's do our weekly debrief of the stock price, see where it's all headed at, and if there's any technicals for us to really worry about. 165.08 sitting on Tesla, and I'll read out some city, state, countries here in a second. 165.08 sitting on Tesla. Remember, we talked about this for the last couple of weeks now. We have about this 200-day moving average, pretty much there to slap us off any sort of strength off of 210. And it continues to be the case. In fact, we've obviously closed a lot lower than our 9 and our 21, which are our lower day momentum trends. So all things point down at the moment. And remember, I think I said this last week, but the gap around 145 to 155, that gap back from January also strikes me as an area that we might as well just fail, being as far low as we are at the moment. So we'll see. Okay, let me read off some places here. Let me just catch up. Chadwick, how's it going? From Cleveland, Ohio. Mimi, how's it going as well? I'm craving some fish and chips. Hello from Detroit. Media, how's it going? DRK, Stefan, yay. Hopefully the music's gone now. Donald, how's it going, my friend? Happy Sunday, everyone. Happy Sunday to you. Hanif, yes, sir. Rock on. Compton, California. Always repping the Juju Gang. Appreciate you, Sith Lord. DRK, someone says hi to you. Stefan says hi to you. Hello, Tony from Montreal. Sweden, Florida. There we go. Sweden, Atlanta. Happy Sunday, fish and chips from Yashu Food Channel. Can you imagine if I made a food channel? It'd be the worst channel in the world. I'd immediately lose like half of my subscribers. Okay, Marco's trying to trip me up here. Oh, I can't pronounce this. Oh, can I? I'm not even going to try. I'm just going to say Should I even try pronouncing this? Okay, I'm going to try it. Here, Hugo Ward, Netherlands. How's that? Hopefully not terrible. Shout out to you, Marco. Hanif, Belgium. East Flanders. Geneva, Illinois. Course Gold, California. Digital, you made it. Welcome. Back from Regina, Paul says, after a week-long road trip to Boca Chica. Yes, I saw your saw your selfie up by the or by Starship, I should say. That was awesome. That looked really fun. Formerly Detroit, yo Bobo, Vancouver. Hey, Andy Local, how's it going, Andy? Awesome. Okay, let's do it. Pretty good. Yeah. Okay, not bad. I'll take it. Okay. Oh, we got even a Finlandian in here. Okay, so let's talk stock for a hot second. We all know Tesla fell 10% post earnings. And the big story was around margins. Tesla margins dropping to the 18-ish%, I think, 18.8 or something, ex ZEV credits for auto gross margin, and 19 whatever it was with ZEV credits. Now, at the end of the day, it's not the end of the world, right? Coming below 20%, everyone set the bar at 20%, including myself. Coming below is not the end of the world. But we got to take into consideration as well that Tesla also lowered prices the day before earnings, okay? And considerably so. So there are further margin declines yet to be had. Now, the question I have immediately are, the couple questions are, one, when are we going to start to see cost reductions, right? We talk about ramping up these factories, and in the earnings shareholder deck, they talked about how there's still inefficiencies they're working through. So they're going to have more cost reductions as the factories ramp up. So there's that. But when is that going to come to fruition? Is that a couple quarters thing, or is that a year thing out when the Cybertruck's rolling off the line as well? So that's the kind of the first question. The second question is Elon said on the earnings call that he's happy to continue to lower prices for these cars to hit that demand, to make sure that the factories that are ramping have buyers for every single car out there, right? He'd rather continue that these factories go on their efficient ways and continue to ramp, so that in a year or two time, when they are fully ramped up, that and we're outside of this recessionary talk that we're in right now, because technically we're not in a recession right now. I know it kind of feels like it almost. But when we're out of this recessionary talk, that these factories can be at full scale, and then maybe prices can go back up, maybe margins can go back up at that point. But Elon doesn't see that so much as the case, as he sees that FSD and software are going to be the name of the game when it comes to selling these cars at an incremental margin profit. Now, of course, you guys know my FSD timeline is a little bit funky, right? I'm not this year kind of an FSD guy. Maybe that's just a function of me not having FSD beta, but I continue to look at the App Store, right? No, everyone forgets about Tesla App Store. The day that they launch the App Store in Tesla cars and they have interconnectivity between Teslas, interconnectivity for entrepreneurs, businesses, developers to start building out apps within the Tesla ecosphere is going to be a big day, in my opinion. That's the Apple App Store moment, right? And we know that our iPhones today would be nothing, mostly, if there was no App Store, or Androids would be nothing if there was no Play Store. I continue to see that Tesla cars are going to be the big story with Tesla cars are going to be the App Store advantage eventually. Now, when is that? Is that a pie in the sky dream for now? Probably. Maybe it is. We haven't heard anything about it. It's not like it's imminent, but the day that it does come out is going to be a big day, in my opinion. And that is what I look at for margin incremental boost, because it doesn't take years for them to ramp up an App Store. It's an App Store. It might take a couple of years for entrepreneurs to come on, develop apps and tools that change our lives, but it's going to be a big day, I think, when they do come out. And again, Elon has been on the Apple sucks. Why do they take 30% of every transaction on the App Store? It's going to be interesting to see what Tesla does when they release their App Store. And if Elon's going to have to charge 10, 20% anyways to cover costs there, when we talk about profits, that's a different story. So it's going to be interesting, right? On one side, I'm really excited about it. On the other side, Elon's dismissed what Apple has done and actually slapped them across the face multiple times for charging as much as they do. So I guess we'll see. But boy, remember, app stores are not about you spending money, right? Often they can be about you downloading an app and the app making money off of ads off of you. Facebook, Instagram, these companies make money off of serving us ads. Partnership with other apps as well. Talk about like DoorDash, Uber Eats, these companies that can plug into, let's say, your Tesla and monetize your car right within the App Store, and you pay a premium on top of that for transacting through the App Store. That's a big one. But advertising and publishing are really the big ones, I think. Hanif, I'll save that question towards the end. But the answer is yes. Okay. So those are my thoughts on that. And I'll just make sure that I caught up on all the comments here. Okay, I've got it all pulled up. So I guess we'll see, right? And exactly, what about the economy of scales going forward, Rick asks. That's the big hairy elephant in the room. Are elephants hairy? That's kind of the question, is that, okay, Austin and Berlin are going to ramp up. How are we going to start to see these costs, these cost reductions come to place with the 4680s specifically, who are supposed to be half as much as cost, half as much as take up, I should say, half as much real estate and land than the current process is needed to. And so these are the questions that aren't going to be solved within a couple quarters. But here's what I also think. The Cybertruck goes into production end of the year, right? And I've been thinking about, you guys know where I stand about advertising, right? I'm pro advertising, but I've been exploring the other side of the debate a little bit, right? And what I think is Tesla just needs to make it to when the Cybertruck finally goes out for deliveries. It's this little chasm of this little gap here between, we talk in April and let's say December for the sake of the argument. that Tesla can have this question about, well, demand and pricing keeps going down, because I really think when the Cybertruck comes out and deliveries start for this thing, I know I'm not trying to overstate this, but I really think walking, living, breathing, driving, advertising machine that Cybertruck will be. So, as much as I say advertising, I've been exploring the other side of the argument. And if you're going to ruin your reputation as a company about, oh, we've never advertised before, we've never spent $1 on marketing for 7 months of kind of a handicap, is that worth it in the long run? And that's kind of the other side of the question that I've been exploring a little bit, to be honest. So, because a lot of people have given me pushback on the advertising debate, and I'm quite glad you guys have, because I'm happy to explore both sides of it. So we shall see. Okay. Let's see. Yes, Volkswagen is building a huge battery facility in Canada, capacity for 1 million cars. I saw that. It seems like a lot of money spent for what they're trying to accomplish. I think 90 gigawatt hours is what they're trying to accomplish, and they spent like $5 billion on it. So, and I don't think there's very many jobs either. Someone did the math, and they were like, it's $5 million per job that they're creating. So, taxpayer funded, of course. Marco, how's it going? Marco, there's another Marco in the chat as well. We got 2 Marcos. By the way, I like your profile picture, Marco. So you picking some juju from your juju tree. Okay. So Paul says 5 million cars say at $20 take rate, $99 a month is 1.2 billion in ARR. So we're going to go through. Should we do that now? Let's just go through that now. Let's go through my back of the napkin. I've got you guys know I kind of try to keep this sort of updated, but it's a little bit hard sometimes. This hasn't been updated in quite some time. I was playing around with it before the stream. But my back of the napkin model, right? And this is a fully fluid, changing, stress testing model that I just plug in random things in to see where we're going to land, right? And so on the right, you'll see deliveries here. I don't think my estimate for deliveries have changed too much. It's 50% CAGR for every year. And then in end of 2026, it shifts to 30% volume growth. Obviously aggressive, but that's why we're only looking at cars sold in 2026. And even though that CAGR follows about a 6 million car for that year, I've plugged in 5 million for 2026. And ASPs I've put in 47,000. Now here's the question with margins, right? Operating margin last quarter, so this quarter that we just got results from was about 11%. Let's say we plug this into, and maybe Tesla has some cost reductions from here, maybe they don't, but let's stress test. So let's put in 15% margin. Remember, the P is going to change. If your company, in terms of growth, if EPS growth lowers because of margin reduction, the valuation that multiple of that company will also probably come down a little bit. But Tesla will always be a little bit premium heavy on their multiple, just because they're the only pure EV play at scale. They're really the only show in town when we talk about EV, especially in North America. So EPS growth, let's say, is now going to be 35%. So that gets you a peg about 0.85. Anyways, let's run that math. So $235 billion in revenue, according to these numbers, $35 billion in profit. So market cap about $1 trillion using that with a 2026 EPS of $11. Okay. So with our risk-free 10-year yield about 4%, risk factor about 10%, discount rate is total, I put in 14. So discounting that back at 14% across those years brings us as a total 2020. Oh, this is 2022. I haven't even updated this. That shows you the last time I logged into this was 2023 auto value about $226, right? $226. And actually, I might be discounting this by 1 extra year. So 2026, hold on, 5, 4, 3. So it should only be 3. Yeah, okay, it is. So $226 is the fair value using these numbers if you accept these assumptions. Remember, when I made this chart, when I made this Excel sheet, I put in the assumptions here. Here are assumptions. Factories in 4680 scale. Margin improves. That's turning out to be a big key one, right? Demand sustains, right? So no robotaxi, no energy, no major stock dilution. So the major stock dilution I don't really see happening outside of stock-based comp, and maybe Tesla buys back a little bit to offset that. But no robotaxi, no energy still in this auto margin model, right? So that's how you can play with the numbers here. If the margin goes down to 10% and the market's only willing to give a 25 multiple to Tesla at that point, here's where the auto value comes out there. So you'll see, of course, the multiple is a big factor. You know, if Tesla trades at a 40 PE, even with that margin, that's still a $200 value. But the margin is a real, and of course EPS, because depending on what EPS grows, that's what your peg's going to be at. But margin really makes a big difference in where Tesla's headed to. The 30% margin at these numbers versus, 10% margin. I don't have to explain this too much, but it's a 1/3 reduction, right, in value. So that's why margins matter so much, and that's why 4680s have to come at scale for this really to work out at scale. So again, there's backup options, right? Tesla has FSD software, energy business, by the way, and we'll go through some charts here in a second. Energy business as well. And honestly, I have to start modeling out energy at this point. I can't continue to ignore it and just focus on auto. I don't think it's complete enough for that to be happening. Boyle says, I think economies of scale and following through on commitments that suppliers that Tesla will ramp are the biggest reasons why Elon will sell cars at break even. That's a good point. Boyle, I never thought about that, but that's a great point that Elon's keeping his word to suppliers and not slowing down production. Yeah, that's a good point. I didn't think about that, but it makes sense. And remember, I tweeted this out. I said this on a video the other day. I said, in recessionary periods, usually the bigger, heavier companies, the legacy companies, for lack of a better term, slow down their growth, their investment, their hiring, everything, right? They slow down everything. And technological leaders, people, companies that are trying to get ahead of the curve, often use recessions as a way to accelerate their leads, because they can take human capital and they can take people from really good positions in legacy companies, hire them. They can invest at cheaper rates because there's not a lot of competition. Obviously it's scary because in a recessionary period, no one knows what's going to happen at any point. But the question is, during this time, is Elon using the next couple of years here to accelerate Tesla's lead here? And of course, by lowering the prices, it is such a pain in legacy's ass what Tesla is doing by lowering their prices. The Model Y rear wheel drive in Canada now with rebates is 55,000 Canadian dollars. 55,000 Canadian dollars. We bought our Model 3 for 53 or something, right? Like it's crazy. And it's been about 2.5 years now, but the Model Y rear wheel drive, and granted, it is a little bit lower range because it is not the long range, of course, and it's not a standard range plus like the Model 3, but it's a little bit less in range. But man, you get a Model Y for pretty much what the Model 3 was selling at a couple years ago. It's amazing. And one thing to take in consideration as well is by Tesla lowering its prices like it has, it also is discouraging a lot of flippers. You guys know what, in the height of Tesla price raising craziness, you guys know I complained about this. If anyone remembers, please back me up. I complained about how there's Tesla flippers out there, and all they do is reserve these cars, take delivery, and then flip them day one for more, right? And I said how the wait lists that we see are a function of a lot of these flippers coming in with cheap money and being able to rinse and repeat this and just increase costs for people. And I hated that when that was happening. So I think there's a big portion of that we're not seeing as well anymore. Awesome. Hey, Boise, Idaho in the house. How's it going? Real. I'm trying to catch up now. $13 billion in subsidy. Oh, okay. Not $5 billion. Okay. I got that wrong by an order of magnitude almost. Jan, how's it going? Okay. Let's see here. Dave says Tesla can pull the advertising ripcord at any time while the plane is losing altitude. We're a long way from that. No hurry. Imagine that. $25,000 Super Bowl ad. If you wished you ordered a Cybertruck when it was announced, hit that like. I didn't. And like if I order it now, like come on, it's not going to come in for another 5 years. So maybe that's actually a good reason to order it. But in Canada, like expectations are low in general for the Cybertruck timeline and how fast everything's going to start ramping up. but especially in Canada, you throw that in. I mean, times the timeline by 2. Moon says, what about the recent ARC price target of 2,000? We're going to be getting to that here shortly. I got Kathy Wood's video pulled up. We're going to hear it straight from the horse's mouth. Nothing but respect for Kathy. I didn't mean to call her a horse, but you know what I'm saying. So we're going to pull that up here in a second and go through what she has to say as well. Okay, awesome. Juju getting strong in the chat. Okay, let's pull it up. Martin says energy got overblown by a few Tesla YouTubers, 40% margins. The 40% margin, the 50%, 60% margin story, that's why you don't hold your breath when you hear these types of numbers. You kind of have a wait to, see it to believe it approach a little bit, because it kind of has to be. Okay, so let's pull this up. Let me just catch up to the chat here. Messi, how's it going? Appreciate that, folks. Everyone's saying hit like. Yes, hit like, hit subscribe if you're new here. If you're liking the content, if you like Tesla content, I think you'll like it. And if you're watching on replay, by the way, as well, which I know a lot of people have to, definitely let me know where you guys are tuning from in the chat as well on the replay. I'll be in the chat as well. How's it going, Abe? Okay. That's fair. Okay. Moon says Kathy's on a horse, but she's a goat. Okay, so let's pull this up. Let's watch Kathy Wood on CNBC. Oh, hold on, which one is it? Talking about her $2,000 Tesla price target for Tesla in 2027. Let's see what she has to say.
Her flagship fund, and Kathy Wood joins us now exclusively. Kathy, it's so great to have you on the show. Thanks for being with us.
Thank you, Morgan. Happy to be here.
So much to discuss with you, but I do want to start with Tesla. Your reaction to those results we did get yesterday, and specifically the fact that the operating margin dropped pretty dramatically to 11.4%, certainly in focus for trading today. Does this change your outlook or your thesis around Tesla?
I don't think one day of trading is going to change your mind on anything.
Not at all. In fact, curiously, we want Tesla to scale its units because each one of them now represents.
By the way, let me know if the audio is coming in fine.
The potential for a robotaxi and a robotaxi fleet. Now, Elon says it's possible that he could launch that fleet this year. We think it's more like last year. But the robotaxi fleet is really going to be, or the robotaxi service is going to be, from a margin point of view, more like a SaaS business. And so we think that it's very smart to maximize units because they have so much option value now.
Yeah. I mean, but we've been hearing about the robotaxi fleet for some time. There's a lot of regulatory barriers to all of that, and certainly technological barriers involved too. So how soon can we actually see that realized? And given the fact that you tweeted earlier today that you've got a new valuation assessment of Tesla coming out, how does that fit into your price target for the stock going forward?
Okay, throw in the chat while we watch this your timeline for FSD full release, right? For all intents, I'm not going to say level 5 because those levels I don't think Tesla really cares about too much. But let's throw in when you can start making money from FSD. What's your timeline on that in months, years, days? Don't know what level you're talking about, but throw it in the chat.
The price target for our stock, and I think it's just hitting now, for 2027, because we do have a 5-year investment time horizon, is our expected value is roughly $2,000, and that's within a range of $1,400 to $2,500, our bear and...
So 1,400 is her bear. She just said it right there. 1,400 is her bear case in 2027, and then 2,500 is a bull case.
And bull case. Now, just Morgan, on the regulatory side, I actually think regulations are working in Tesla's favor. I think, roughly 3 decades, the number of auto fatalities in the United States fell to the low 30,000 range per year. And they've turned around in the last 5 years and moved up to 45,000 plus. And I think the pressure is on the National Highway and Transportation Safety Association to change something. So it is looking carefully at Tesla's data. And during Investor Day, Tesla released some data that we don't think many people paid enough attention to. The most important one is that with full self-driving, a Tesla vehicle gets into an accident every 3.2 million miles. And that compares to one every 500,000 miles for the average car on the road.
Okay, so Kathy.
Okay, so she just threw out a stat out there: 3.2 million miles for every Tesla accident, 500,000 for every other car. Now, we do have to be careful with these types of stats. Remember, there's omitted variable bias with stats like this. Is it just because the type of person that buys a Tesla is usually safer and they're going to drive safer, and it's not the Tesla that's having less accidents, it's actually the person? Are there other variables that we're missing here? So we have to be careful with one directional stats for sure, and that's kind of a pet peeve of mine with statistics and surveys, is how bad the methodologies are. Anyways, but it's still a wide enough it's still a wide enough gap there where you start to throw out, like, okay, how much of that is autopilot, how much of that is FSD? And she's saying that they're going to use these stats to be able to push through FSD. And judging by the comments that everyone's leaving here, it seems like there's a handful of people that think, this year or even next year. But a lot of the comments I see in the chat are 2025 and beyond. Some are 2028.
Hold on. Good afternoon. It's John Ford. I just want to clarify. Did you say a $2,000 per share price target? Tesla right now is under 200 a share. So even if you were to 10x that would be an over $5 trillion market cap. Is that what you're saying?
That is what we're saying. We think that the robo-taxi opportunity globally will deliver $8 to $10 trillion in revenue by 2030, and is one of the most important investment opportunities of our lifetimes.
Okay.
And I think one of the reasons for that is it is going to save lives. 80 to 90% of auto fatalities and auto accidents are caused by human error. And autonomous driving is going to take away the human error, we believe.
So that's a, very, very, very interesting perspective from Kathy. She doesn't care about anything,
talk
right?
About this and more in a CNBC.
Let me turn this off. She doesn't care about, she's not talking about, well, I think Tesla Energy is going to scale, and Tesla's going to be able to make these 4680s. Like, she really thinks the entire story for Tesla, forget about energy for a second or Dojo and stuff that we like to talk about sometimes. FSD is such a huge opportunity in her eyes that she sees that as the biggest opportunity for Tesla's step change in growth, right? So that's what she thinks. She obviously has some sort of data and insights, more insights than I would just as a layman here, but let's play along. So let's say that is the case. Let's say FSD does come out fully. It would probably be a software update. Tesla will probably have to start in some sort of geographical area to begin with and prove out their model and make sure that everything's up to snuff. But there's a lot of cars out there in the fleet, the reason why's that could immediately be thrown into the fleet should they need to. So I'm excited. I'm not going to hold my breath for it just for timeline. Actually, Elon, it was funny. Elon on the earnings call was like, I really think we're going to solve FSD this year. And then kind of even chuckled, and you heard like Martin laughing in the back a little, or not laughing, but chuckling a little bit in the back. So, it's become a running joke at this point, but of course it's a huge upside option opportunity, right? So we shall see. That's a great quote, Jan. That's a great quote. So we'll see. Of course, FSD, you're never going to solve FSD 100%. It's always going to be those 1.00001 edge case, like Elon says, March of the Nines. But it has to get to a point where it is good enough to be running. And what makes Tesla unique as well is they're solving it with their machine learning large data model. So, and they're using cameras and not sophisticated props on their car for all intents and purposes. So if Tesla were to license this out, it would not be hard for a lot of manufacturers auto makers to be able to implement this in their new cars, because all they would really need are just 360 cameras on the car and then be able to sync it all within Tesla's model. Again, this is me, not an engineer trying to talk about this, so bear with me, of course. But I will also throw in a StreamYard link. If anyone wants to come on to the stream, feel free to. You can come on mobile as well, no biggie. You want to share your thoughts, give a comment, talk about Tesla, margins, prices, really anything around Tesla, feel free to come on. Okay. Let's see here. Let me go through the comments. Let's see here. Yeah, I mean, not only just... So, look, with the robo-taxis, let's say they do come to fruition, right? Of course, they're going to carry lower cost. They're just going to. Robo-taxis don't have the added cost of the driver, and that's the bottom line. If the robo-taxis come out with anyone's Model 3 today, Model Y today, the cost of you running that is way lower than you going out and Ubering yourself or lifting yourself. So, of course, those savings are going to be passed on to the consumer. By how much? I don't know. But watch, I bet you there's going to be jurisdictions that are going to throw in a robo-taxi tax or something like that as well, because that's just the way it goes, right? Martin asks, Ash, why is Tesla cutting prices? Is production greater than demand? Is the economy driving the lack of demand? Well, look, Elon said on last earnings call, he said, demand is so high, and he kind of hit it, right? He was like, we cannot make enough cars. We have way more orders than we have capacity to build out. And then we saw Tesla cutting prices and then talking about unit volume. So, I don't really know what to believe fully. Farzad explained this by saying, he said that he heard Dave Lee explain Elon's version of demand is not the average person's definition of demand. He looks at demand across all price points, which of course is not demand, that's, I guess, aggregate demand, but it's not PQ, right? Or quantity demanded at P, so QP. So, there's definitions going around here, but the bottom line is that Tesla is cutting prices because they cannot find all the buyers that they need for the cars. If Tesla could find all the buyers for their cars that they're producing, and of course, supply is going up as well as these factories ramp up, they would not be cutting prices. So they're cutting prices. And so that's why I bring up the advertising debate, because if we know that Tesla is cutting prices because their production is getting up there and demand is staying, let's say, stagnant, if not growing disproportionately slower, why not advertise? So these are the questions I would bring up to Tesla management or to Tesla. And of course, Elon's answered a little bit of this, but, agree to disagree a little bit on that. So we shall see. But is the general economy driving the lack of demand? If anything, Tesla's outperforming the competitors, but I don't even compare Tesla, to be honest, to competitors, because first of all, most of Tesla's competitors at scale are gas car companies. That's not what Tesla's apples to apples comparing themselves to. And then all the other EV makers are at this stage of their companies where, they're making barely any cars, and they're all at losses, massive gross margin losses. So comparing them to Tesla also doesn't make any sense. So, but, there's a lot here that we can unpack, to be honest. Abe, I see that you're backstage here. If you want to come on to camera and off mute, let me know, and then I'll pull you up here once I see you. Dirk says the driver of the biggest cost after maintenance and fuel for Uber. The driver is, yes, absolutely. No, there wasn't another price cut on Friday after hours. Oh, you know what? There was the news, and actually I'll pull it up here. There was did I save this? By the way, if you didn't catch it already, Model Y was Europe's best-selling vehicle in Q1 this year. So not best-selling EV, but best-selling vehicle in Q1 this year. That's pretty savage, right? Yes. So hold on, let me just take that off. And by the way, in case you were wondering, the wholesale used price Manheim index that tracks prices and values for used cars has come down for the first half of the month. In fact, it's come down 4% sequentially. So we're seeing used cars prices, and used car prices are still nuts, though. Like, they are as high as they are, but it's still pretty crazy how high they are. So take that with a grain of salt. And also, I wanted to share this as well. This is straight from Discord. I found it on Twitter, so I'd like to give credit, but I don't really see who it's attributed to. But these are the battery investments by OEM. So battery investment $400 billion by Tesla, EV investment $100 billion. Toyota is funny, and they're coming in at $56.4 billion invested on EVs, but very little in batteries. Toyota is spending a lot on advertising. It's actually hilarious, but they're mostly just virtue signaling with their ads. Volkswagen coming in $57 billion on battery investment, $55 billion on EV investment, and then you can see the rest. I mean, it's very little. Surprisingly, Nissan is not very high as well here. BMW decently, but GM also not very high. So Tesla takes us by a country mile. And of course, planned EV production by 2030. Tesla's planning for 20 million. Toyota's planning for 3.5. How that's going to happen, I have no idea. Volkswagen planning for 5 million. I can actually see that. Ford 3 million. GM 3 million as well. Honda 2 million. So this is a handy dandy little chart here. I threw it on Discord if any of the Juju Gang members want to pull it up. Scroll up to yesterday. Okay. So let's hold on here. I'm just catching up here. Okay, catching up. Okay. Actually, Rick, wow. Okay, Rick, I don't know how you did this, but you timed this perfectly. Rick asks, did Morgan Stanley's Adam Jonas suggest OEMs should scale back their EV production goals due to Tesla price cuts? Price war. Okay, Rick, great segue. Appreciate you. Thank you. So Sawyer Merritt tweets, shout Sawyer, a note from Morgan Stanley's Adam Jonas. Quote, in the wake of Tesla's Q1 results, we've had many discussions with clients about what it means for legacy OEMs. If Tesla weaponizes their cost leadership in form of price, potentially sacrificing as much as 1,000 basis points of operating margin in the process, doesn't this impair the economic returns of EV spending plans and legacy players embarking upon? Our opinion, the answer is yes. So overwhelmingly yes, that we are questioning whether this is the moment where the boards of the legacy OEMs can reconsider dialing back the magnitude and timing of their EV CapEx and R&D plans, allowing more time for the ICE runoff to generate cash while we enter more uncertain macroeconomic area. So the point that, and look at this, is Tesla doing Detroit a favor? Adam Jonas writes. And by the way, I just wanted to say, Abe, I see that you're not on the backstage here. I just couldn't see your camera. So if you want to come up, show your camera, I'll pull you up here right after this note. Is Tesla doing Detroit a favor? The big narrative change in Tesla's story as they invest their cost leadership in industry high margins into lower margins. We expect OEMs are recalculating the return on invested capital math on the next $50 billion of EV CapEx. So two things can be true at once. Tesla is making EVs even less profitable for these legacy OEMs, right? They're making it so if you're GM, if you're Ford, and you're trying to compete with Tesla at the prices that they're at currently, it's not going to happen. But for the recommendation that they should have a larger runoff period for gas cars because Tesla's lowering prices, that is so backwards. That is backwards. If anything, what Tesla is doing, Tesla is making them pot committed into EVs. They're making it where there is no turning back point. They're making it so the consumer that comes into the dealership and says, why would I buy a Mach-E for $75,000 when I can buy a Model Y for $55,000? What's happening? Why would I do that? They're making it so it's such an obvious choice for anyone to buy a Tesla if you're in a market for a new car. That, and I'll be, here's the link again. That at the end of the day, I don't see how this is good. So I don't see what Adam Jonas sees here, but let's continue to read, and mostly let's read the conclusion here. Let's see here. Okay, even before Tesla reduced the base price of the Model Y in the U.S. by nearly 30% year to date, we struggle to see how Detroit could achieve a return on invested capital on their EV investment anywhere near the weighted average cost of capital, or even a positive no-pat margin at all. The issue is compounded by the potential risk that legacy auto investment may be based out of date, potentially obsolete battery tech. That's a big point right there. So Adam Jonas is just basically publicly saying, look, even though even though we think this, this could potentially work, but it's a little bit less profitable now, and it's actually not profitable at all. But the big problem here is this potentially could be their whole model could potentially be based on obsolete battery tech. You talk about pouch cells, right? With for example, like the Bolt had a problem with this. The battery management systems in these legacy cars, I talked to a lot of people at work and people in general about EVs and them switching over. And a big question they have is batteries. And they're like, well, the range is pretty equal. And I have to explain, well, look, when you got your iPhone 2 years ago, does it last for the same amount of time as it lasts today? No. So there's some degradation there. How much is that? Do you know? Well, you can pull that up in your iPhone settings. Well, on a Tesla versus a Mach-E, you're going to see the same, and you're going to have to do your own research on this to see which one works out more and which one works out better for you in the long run. I was actually talking to someone about that, about their Mach-E. Pardon me, not their Mach-E, their Audi e-tron. So yeah, what's NOPAT? NOPAT's that is the net operating profit after tax. So don't worry about it too much. It's just basically your net profit. But anyways, this is a very interesting note from Adam Jonas, and he's even titled it "Billionaires Poker. These guys just won't go away." So, and that was his old note back in 2013. So it's really interesting to see how legacy auto is an entire tailspin. This seems like mostly a spin job. And by the way, he actually addresses a lot of the concerns we have. So we'll get to that in part 2 here in a second. But let me pull up. We have a couple of guests here waiting in the background. I'll pull up Abe first and then Paul second. Shout out to you, Abe. How's it going, my friend?
Hey, Yashu, how are you?
I'm doing well. Thank you.
Okay, can you hear me okay?
Yes, you're coming in loud and clear.
Excellent. Well, happy Sunday to you. I'll keep this brief. I have 3 points, actually. So number one is on advertising. My current car is a Toyota Highlander from 2008, and it's pretty, doesn't have a lot of mileage, but it's beat up. I want to buy a Tesla, a Model Y. Okay. I told my wife I want to buy a Model Y because she wants to buy a new car, and then she said, "You don't want to consider a hybrid?" I said, "Of course not. Why would I get a hybrid?" She said, "What about other EVs?" I said, "Other EVs are terrible." She's like, "Oh, really? I didn't know that." So that surprised me. Married for 20 years. Okay. But the most other important point is she said to people, "What about charging? I have heard that this car won't go very far." I said, "No, we're going to have a charger in our garage, and there are tons of charging networks, stations." Short story is, even my wife doesn't know that charging is not an issue with Tesla. So I had to walk her through that.
Yeah. No, it's true. It's and why is that, do you think? Do you think Tesla doesn't do enough to educate? Do you think people don't go out of their way to look at it? What is it?
Yes. Yeah. I think it is the first one and the second one. I think we live in a Tesla bubble. We know everything about it. Maybe I should talk to my wife more about Tesla. I don't think she cares. But I think the point is, forget about how great a Tesla is. If Elon just kind of, is less stubborn and just does a simple advertisement about how it can be charged at the garage or your home, and it can be, and the Tesla charging network is wide, you don't have to worry about it. I mean, it'll be so huge. Anyways, I think that's one point. I mean, I'm preaching the choir here.
Right.
The second point I have is, what disturbed me on the conference call is, and I think you kind of addressed this around the definition of demand for Elon is different from people like us. He said, demand is not an issue. We'll sell everything that we produce. I don't think that is right. And I'm struggling with that.
Yeah, because I took that as, at the current prices, we have unlimited demand almost, and we have no problem. But then lowering prices kind of contradicts that. And there's some people, by the way, that like to argue that, oh, Tesla's lowering prices not because they have to, but because they want to, and they're trying to pass. Look, Tesla if Tesla didn't have to lower prices, they wouldn't. They have to because they're as these factories ramp up, maybe as demand dries up a little bit in different geographical areas, they have to lower prices. It's not because of the mission. Of course, longer term, that might be something that they want to do anyways. But right now, they're doing it for the opposite reason why they raised prices during the pandemic, because wait lists were getting too high. They were going from 1 to 2 months to 3 to 6 months, and they couldn't have that, so they had to keep raising prices to lower that wait list. So yeah, it seems like the definition is off there, but yeah, I was a little bit thrown off as well.
Yeah, I think if you, and I know they lowered the prices in January and then throughout Q1, but if you look at the delivery numbers, it went from 405 to 423. It's not a huge jump.
Yes, but also it's one of the only sequential growths from Q4 to Q1 that we've seen from Tesla. And in the auto industry, it's hard to grow in Q1 massively anyways. Q1 is just a very weak quarter for autos typically. And if you look back the last few years, Tesla really doesn't grow sequentially from Q4 to Q1 very much anyways.
Okay.
You have to look at it year over year, I think.
Okay. So
yeah.
Q2 should at least be 450K or over. No?
I'll have to check what consensus is, but I'd reckon, I mean, production at least, right? Because production will be higher than demand. So some people are saying as high as 500, but I don't see how that's happening. I don't.
No,
think
I'm talking
500 is in the
delivery.
cards.
Delivery should be 450K, but that's fine. I mean, I think that the price cuts are effective argument. I'll agree with that if the delivery is very high, but that's here nor there. I think if Elon just came out and say times are tough, recession's here, people don't have money, they can't buy the stuff, that's fine. I'll get it because I'm a long-term believer that this is this product, Tesla is the way to go. So
yeah,
but I think I would just like a little honesty. So I think that's the second point, and I think my last point is. And for the first time, I made the right move before the earnings call. I sold a bunch of covered calls. I never do that. I usually buy them back and I sit and tight and I'm hoping. I'm always a bullish on Tesla. I'm like, oh, it'll go up, and then I'll sell covered calls. I said, screw it this time. I just sold a bunch of covered calls and bought a put, and I'm a happy camper. I actually don't like that the Tesla price is down, but man's got to make some money.
I like it. Congrats. That's awesome. It's funny because it's because I was thinking, I was like, well, sentiment is so negative going into earnings. And it was like, man, I don't remember the last time it's been this negative and people are down on everything and people are expecting margins to be just disgustingly low. And so I was thinking to myself, I'm like, is this one of those reverse Uno moments where it's like expectations are so low and it's like all Tesla needs is one thing to spark. But it just seems like in this macro environment with everything where it's at with Tesla and how many price cuts have happened, and even the day before cutting prices again, it just seemed like there was nothing Tesla could have said for the market to like it with the numbers that they released. So
so I think not only because they brought the prices down, I was like from 405 it went to 423. I mean, EPS margins are going to be down, but I think multiple quarters or last year and this year, what surprised me, and then a lot of the Tesla community doesn't talk about it, is the free cash flow. Like that, I think, is that the right number? It kind of went down quite a bit to 400 million or something.
Yes, it was way lower, but a big portion of that is because of foreign exchange and the cost of FX there. So, Tesla being a non-benefactor of that has a big portion into the free cash flow there. So yes, it did surprise on the downside. I think it was supposed to come in a couple $1 billion higher, but at the end of the day, almost $1 billion of that was just foreign exchange hit. So it's not really paramount to Tesla's business. It's just the way that the macro environment hit.
Right.
So,
but as a trader, right, I need to keep my radar on to say, hey, watch for this. And I don't know how I can get that information. But I think the last comment is, I'm also this Mexico, whatever the right term is, cost of building the Mexico facility is going to hit Tesla. I don't know whether it is Q3 or Q4, because you remember when Giga Berlin was coming up or Giga Austin was coming up, that had a big hit on Tesla's costs. And so now Mexico is going to, so that's going to That's a big fire pit that's going to burn a lot of cash, and I don't know when that's going to happen. So I think those are some of, so you might sell a lot of EVs, but you might also burn a lot of cash. So there are a lot of variables there you got to watch out for.
Right on. Appreciate your thoughts, Abe, as always. Take care, my friend.
Thank you. Hey, Yashu is the man. Okay, everybody put a like in there, please. I mean,
I love it. Love it.
80 likes. We should have 800 likes because I think yours, and I also like Rob Mowers. Like, you guys are very even keel about Tesla, which I absolutely love.
Right on. I appreciate that. Thank you so much.
Thank you.
Thanks
Have a
for the
great
kind
Sunday.
words.
Yeah.
Take care. You too. Shout out to Abe for coming on for the kind words here. You heard it here first. You hit like, hit subscribe if you're enjoying the content. Let's pull up our next guest, and I've put in the link here as well. If anyone wants to hop in, you can hop in on your phone. I think Abe was on his phone as well. But I see Paul, our friend Paul here, has come on from a nice little setup that you got going on there.
In the Regina co-working space here. It's kind of nice and quiet Sunday morning.
Right on. Awesome. And so tell us about, so if anyone doesn't remember, a couple of weeks ago, Paul came on as a little guest spot and said that he is FSD betaing all the way to Winnipeg, was it, I think, last time? Or maybe it was Regina.
Toronto to Regina, yeah.
Regina, right on. And I reckon you're there. Give us your thoughts in general or whatever you wanted to share with everyone.
Well, so FSD on this trip was amazing. I got my 5 strikes and booted out of it. I guess it would have been just outside of Dallas, kind of going through Dallas. So I went back to AP and Enhanced Autopilot and was reminded about how good that product is. Like, I don't know. I think if FSD is ever going to be a big driver of profit for Tesla, they have to reprice all of that stuff or else rethink the functionality because AP is way too good just to give away. But actually, what I was going to mention on this, I talked to a number of Lightning owners over the past, my trip, but also before my trip. And what's really interesting is how much they all love them and how much they also can't use them for their commercial purposes. So one is an oil patch supply company, and they're multinational. They have all these ESG things they have to hit. So they bought a big fleet of Lightning. They all love them. Some of them, they bought personal Teslas to use at home because they love the EVs. They never would have bought an EV. But range and infrastructure, they say it's just unpractical for any use case beyond just driving around town. And the other guy was similar story. He's a fence builder near Dallas, I think he said. And so they're hauling out stuff to ranches and building fences. Love the product. Also can't use it because, they get to their site, they're basically at 10%, but the nearest Ford available charger is like an hour away and it charges at like 12 kilowatts or whatever, right? So basically like, I can't use this for anything. So there's sort of two parts of that, which is if these things are bringing in a bunch of users to EVs that never would have considered it, and they're also the best advertising for Tesla tech being so far superior. I described my experience with the car, but also with Cybertruck coming out, if it delivers on spec, they all said the same thing, which is we think this is ugly. We would hate to drive it around town, but if it delivers the type of experience of having a Lightning with all the benefits of Tesla, like they'll all consider buying it. So it's just interesting to see.
Well, the first intro we had as a family to electric was the Nissan Leaf. And it was a glorified golf cart. It was like 5 years old. We bought it for $7,000 and it was 120 kilometers range. That's like probably 2 miles for my American friends. And it just was like a city driver. Like we bought it knowing that it wasn't going to go very far, but like we were mostly driving the city. And if we can cut out $200 a month in gas, that this actually pays for itself almost, right? Even if we drive it for only 2 or 3 years. And so, but driving that, we had the same pain points. It's like, damn, it'd be great if we could drive 5 minutes further, right? Like it's like, we had all these pain points and it's like charging was annoying and like we would go to the BC Hydro chargers and but you're right, it introduced us into the ecosystem of wanting to do more research of like what else is out there and why do these cars suck or why do these cars, they advertise this range, but how does battery degradation come out? So it's honestly what led to me even looking at Tesla or, my dad buying it. He was the first one to buy a Tesla in the family and buying his Tesla because it introed us into electric in a very easy way. And I hear that a lot. There was someone at work, and I think I tweeted this out a couple weeks ago, that he had a Ford F-150 Lightning on reserve, and they contacted him last year and they said, look, we don't have any of these coming right now to Canada, but do you want a Mach-E instead? And so he reluctantly agreed, got the Mach-E, but now he's trying to get rid of it because it just doesn't fit what he wants, and his range is not up to snuff, and he just doesn't love it. And so he's asking me about, like, oh, how did you go on a trip to Banff? And, you know, charging sucks, and electrify Canada and all this stuff. And I'm telling him about the supercharging network and how many kilowatts Teslas can charge at in terms of V3 speed. And it's just like a whole new world for him, even though he's been driving an EV for a whole year. And so I agree. I think getting people in the ecosystem makes sense, but you're right. A lot of these people are going to realize at the end of the day that Tesla is just so superior with their tech that it's just a no-brainer when we talk about a lot of stuff that happens in the EV space to have to pick Tesla. Not sure if you can hear me still. Can you?
I can hear you. Can you hear me?
Yeah, I can.
So on my computer audio. So how do you think in BC, obviously it's a little more progressive in a lot of things. If you had that Leaf now, would it be a much better experience?
Not for me, because I'm in a condo, so I don't have level 2 charging at the moment. Back then, I had access to a plug. And to be honest, there's a lot of level 2s out here, but they're really not amazing. And I think the only way I'd get the Nissan Leaf golf cart again, the one that's like 5 or 6 years old, is if I had an access to an overnight plug every single day. And that's just not the case for me anymore in my new place. So I need something with more battery. But chargers have gotten better. Like BC, there's more BC Hydro chargers. There's more charge points chargers out there. So it's definitely more doable. But I think if you're going to go the golf cart route, the glorified golf cart route, you probably need a garage, like a full-on garage, which I don't have.
So what's your take then on opening up the supercharger network? Because it's going to draw in a lot, it makes a lot more vehicles practical, right? So now you can get a Leaf. I could recommend like a Ford Mustang or whatever to somebody that right now, even in Western Canada, I don't recommend Tesla to a lot of people based on their use cases. No, if you're in the city, fine. If you're the bulk of your highway driving is done on the main highways, it's fine. But if you're in like where I come from and your drives are Wednesday night to go to a hockey game, 2 hours away in the middle of winter, that there's no superchargers anywhere near you, it's not practical yet. It's a massive advantage, but also pulling people into the EV world, it's probably not a bad thing for Tesla in the long run.
Man, I'm so torn on this, and DRK says the same thing. Like the supercharger is a gateway, right, drug to Tesla. I don't know. First of all, as an owner, of course, I want less people at these chargers. I'm selfish like that, let's say, right? Just like very micro oriented, selfishly looking at this. But I'm looking at this almost like the Apple iOS network, and like how Apple has this iOS that's proprietary to them and they only allow it in Apple products. I see the supercharging network in sort of the same way as I see that. And if Apple were to just give Android phones iMessage, I bet you a lot of people would just stick with their Androids. Like, I don't know. And of course, an iMessage consequence to the world is very little compared to everyone electrifying. So I get that in that sense. But I really do wish that Tesla had the advantage for a long time, and they had this as a moat as a company, because we talk about profits and corporate goals are usually profit. I think it's a big boon for Tesla, but of course Tesla doesn't care about this. Tesla doesn't even Tesla patents stuff only to want to give it away to companies. So it's a different mentality for them. But I have to think about this a little bit more, because I honestly think, I'm not sure if it's a mistake. I'm not going to say it's that, but it is giving up a huge advantage, I will say.
So on the Apple stuff, remember when they opened up iTunes to Windows, that was sort of like a massive accelerant into adoption of Apple iTunes and stuff like that, right? Like it brought their products to a lot more people that wouldn't have touched an Apple product prior to that. So I wonder if maybe the answer is also just a pricing thing, right? Like if Apple could generate a couple % of a cent every time an iMessage is sent, then it would make sense if everybody in Android was using it, where maybe Tesla just needs to really jack up their prices a little more for access to the network, instead of just, what was it, $10 a month you get the Tesla pricing. Maybe it's $20 a month or $50 a month or something like that, because I mean, as an installed base, EVs is going to keep growing and growing. And I just, I think if you have the best infrastructure in place, you're growing it faster than everybody else is. Why not?
Yeah.
Why not charge the premium for that and get the money that way?
That's a good point. And maybe I actually didn't think about the iTunes aspect, but you're right. My first Apple touch point was iTunes and putting all my LimeWire music on it and playing on it. So, maybe there's something there. I'm gonna have to think about it more. And to be honest, usually my gut reaction is wrong, so I hope I'm wrong here. I just really hope Tesla continues to build out these superchargers en masse, because the last thing I want is have to wait 30 or 40 minutes on a road trip weekend to go somewhere and having to see backups everywhere. But Tesla's getting pretty good at it.
I had my first waiting experience on this trip I've ever had. I guess all the Tesla nerds fleeing Florida or Boca Chica after the launch, heading north, right? And there was a couple stops where it was pretty tight, and I don't know, 20 minutes wasn't the end of the world. Is what I waited on the one, but
okay,
yeah, I could see it, and then that's where just maybe Tesla outlining more how they're going to deploy this additional capital to accelerating that build out, which they are. Like, we know they are going flat out like that.
Yeah.
This week reiterated to me that Elon picks the path he thinks is best and goes flat out. Like, just driving through Boca Chica, seeing the factory there. I detoured to Austin to drive by the Gigafactory just to see with my own eyes the scale of that thing. It's I don't know. That guy has one speed clearly, and it's flat out. So I think more superchargers, charge for it. I could wrap my head around that, but anyways, that's kind of what I wanted to talk about, the Lightning as a great advertising tool for Cybertruck, and just if they can deliver on specs, and also like they're learning stuff from Semi, right? So maybe they can incorporate some of that. That's set up with the 3 engines, where the back one was like efficiency on highway for when they're hauling whatever loads. Like, if they can work some of that into the Cybertruck some way for a work truck, like a heavy duty work truck, I mean, the possibilities I think are pretty much endless, because these people all thought the truck looked like complete dog shit. But if it performs as they had kind of outlined the specs were, the use case, the economics of it, like everybody sees that tries an EV. That was my thoughts.
And before you sign off, the folks want to hear about a few words on seeing the Starship launch.
So I arrived super late Sunday. Like, this was a Friday at work. I was having a rough day of work, just annoyed, and kind of looked up how long it would take me to drive down there. And it's like, I could get there Sunday night. So
Wait, what? Really? You just
to my fiance is like, my fiance just crushed his work right now. So I was going to sit around in Regina and do nothing anyways. So it started as like a dumb thought in my head, and then like, oh, this is actually kind of doable.
Wow.
So I did that. So I got there late Sunday. It was supposed to launch Monday. I still drove out to the launch site just out of curiosity, and you're just blown away by the access you have. You can walk right up to this thing. Like, there's the night before a launch, no one was looking in my car for anything.
Wow.
It didn't go Monday, obviously, but what that allowed me was to get out there in the light of day and just seeing everything before it launched. The full stack was just kind of awe-inspiring, I would say. And then you come back from the launch site and you see the factory where they're just building another 3 or 4 of these things. And it's the same thing with Tesla, right? The scale, the manufacturing, that's where the magic is. It's not so much in the thing that looks magical. The launch itself, it was amazing. I mean, would I drive that far to go see a launch again? Absolutely not. I'd probably do 4 or 5 hours maybe. But I'm glad I saw this, right? Because if we end up on Mars in like a decade or two, like, this is a decent probability that's a historical launch. So it was awesome.
So how long was the drive in hours?
Oh boy. So I stopped in Midland, Texas to see some friends on the oil patch there. So I think I left Friday at, call it 5 or 6 Regina time. I got there Saturday morning at like 2 in the morning. And then there's another 8 or 9 hours to Boca Chica from there. I don't know. I have to run those numbers, but I think my odometer, actually, I don't think I checked it when I got back here, but it'd be like, I don't know, 3,000 or 4,000 miles probably. It was a good hike.
And how much did it cost total supercharging for you?
I think I checked it when I got down there, and it was like, I want to say 275 or 300. Like, it wasn't as bad as I thought it would be.
So about 150 each way.
I think a little more than that. Next time you're on stream, I'll throw it in the chat or something. I'll actually take a look and see.
Cool. Yeah, I mean, that's a long ways to drive, but shout out to you. That's awesome.
Just napping at superchargers is kind of a nice cadence, 2-hour drive, 20-minute nap.
Man, that is crazy. Epic. Awesome, Paul. Appreciate you coming on, man.
All right, take care.
Take care. Shout out to Paul. Shout out to Ave for coming on stream. Wow. That's a far drive, folks, from Canada all the way down to Boca Chica. Like that's a no joke. Let's pull up. And then, so this video is Tesla's tumble could get worse. It says the chart master, Carter Worth. Let's see what he has to say about Tesla's
maker ending the week down nearly 11% after a big margin miss. And now there are new concerns from investors worried that Musk is stretched too thin, not paying enough attention to the automaker. So can the stock find its footing? Let's bring in the chart master, the one and only Carter Worth of Worth.
So wrong answers only. What do you have to do to be labeled the chart master? Okay, wrong answers only. What do you have to be? What do you have to accomplish to be labeled the chart master?
Charting here at the NASDAQ. Carter?
Well, it was a bit of a tumble. And of course, it's the reciprocal or the equal and opposite action from the prior quarter. That gap up on the 26th of January, euphoria, and this is the exact opposite. All I can think of here is like, kind of what's the point of buying into Tesla when you've just had a setback like this? You know that for the past 2 months, people have been purchasing the stock basically between 180 and 210. And now you're sitting here at 165, which is to say, let's say it never goes lower. It's just so difficult to go higher. You've got money that's trapped that would love to come out of the bets that were made. Forget about bets from a year ago or two, but just have recently committed capital, and it's immediately wrong. We've all been in that situation, and usually first loss, best loss, you want to get out. I think Tesla's sort of a dull duck here. The downside risk is to that 146 gap from the January earnings.
146.
So he thinks the downside is 146. To be fair, I mean, that's what I said with the gap down. I said the gap from end of January is what I'm looking at.
I know that you are an avid watcher of the show in general, Carter. So I'm wondering what you think of Dan Nathan's price target, which is like 60-something bucks a share. I mean, is there?
Is it?
Yeah.
60?
60-something, yeah, 65,
well,
69.
let's say it this way. The path is 60, passes through 145. I mean,
right.
You got
this just in.
60, that's tomorrow's lunch.
But
That's
I mean, is that like another support
it's very hard to know.
Lower than 140? Or?
I mean, look, anything's possible. I think that's, here's what I found is that when, just from over years, decades of publishing notes and clients, when you have something that's so outsized, you lose the audience. And not to say that Dan's audience is different than mine, but when I put out a note, a hedge fund manager, a pension plan, a family, they're like, come on, you think it's going to triple from here? You think it's, and so I try to have price targets that typically are where the imagination can allow. But listen.
Right.
Okay, so he filters out what he thinks is true based on what he thinks other people will think is realistic. I don't care if you have a price target of 60. What I care about is your thought process and the modeling behind it. So maybe I'm wrong, maybe you're right. That's what I care about, not about how outlandish it may seem on the surface.
The imagination, maybe it's 60.
So let me ask you something. When you talk about given what's happened, is that just purely what's happened to the stock price as opposed to margins or cost cutting on cars, anything like it's just purely
well, remember, this is
technicals of the stock?
Well, this sell-off, right, is the equal and opposite of what happened over the preceding 2 years. So you have a stock that no one believes in, and analysts' price targets are below the stock, and the stock keeps going up and up and up, and analysts keep revising their price targets. And then, of course, the stock turns down, and now analysts are lowering and lowering their prices. It's just exactly the opposite of what happened. A great unknown that's now known, right? The highest multiples, and you know this as a manager, are always assigned before you actually start to put up earnings. Once you put up earnings, then we can do our DCF. The biggest multiples ever are always on biotech or technology stocks that have never made a profit because it's all a dream. Once you start to actually make the cars,
Or they're the highest multiples because there's nothing to multiply the stock price against because the earnings are non-existent. I
produce the earnings, have real margins, the things you're talking about. Then you can't have dreams anymore. You gotta get real.
So poetic.
It is, isn't it?
Here on set. Yeah, I mean,
quote worthy.
Jeff, I'm curious what your take is on the quarter because there seems to be a real narrative change.
To be fair, he said a lot without saying anything. Let's be honest.
With this most recent earnings, they're basically saying, you know, we're willing to fiddle around with price to boost sales. We will do anything to price. We look at pricing every week. There are very few companies out there, particularly of big ticket items, that say we're going to look at pricing every single week and decide on that week what we're going to do with it.
Yeah, maybe I'm wrong, but I thought I read something today that they tweaked a couple of models a little bit higher today after the move lower.
SNX.
So it's kind of all over the place. So it's hard to project what the margin profile is going to look like. And I think that is maybe part of what investors are struggling with right now in terms of the stock. But I ask myself, and obviously it's not an apples to apples comparison, but what are other car companies doing right now? Ford, GM, Toyota, they're all at the lows and they're all trading at 7 times forward, and Tesla's trading at 40 times. Now, again,
we're back on this train.
It shouldn't be trading at the same valuation, to be clear, but I think that that's an apt comparison in terms of where the stock can go. You know, I've been looking at similar levels to the upside at 206, to the downside at 155. I think it goes below 155. All bets are off. I think if it holds there, it can maybe drift to the top end of that range, but I think there's more risk to the downside here, just given some of those dynamics you're describing relative to price.
Well, look, Ford and GM are on this chart here with this guy, right? And so you can't see it, but it says 7.5 PE forward PE ratio for Ford and 5.4 for GM. Okay. I mean, what big difference? The majority of these cars that these guys build are going to be outlawed in a decade. Quite literally outlawed in a decade. Can they switch to EVs just because they're both cars? That's why they trade at such low multiples. So I would argue these companies are artificially lowered in terms of their PE rate, and they have no growth, and they have a lot of debt. So let's not even get into that.
Prices and demand and margins.
Just curious, how do the other automakers look on the charts?
Just as described, Ford, 52-week low, General Motors, Toyota. Now, that's not the case with Mercedes-Benz and BMW, acting very well.
Okay, so that was one of those segments where you watch and you're kind of scratch your head. You're like, what just happened? I have no idea, because I didn't pick up one meaningful insight from that segment. I don't know if you guys, the wrong answers only. What's a meaningful takeaway for you from that segment? Let's bring on our friend of the show, Bahadir, coming on here. Let me know if you're ready here. I just pulled you up here. How's it going, my friend?
Good. Can you hear me?
Yes, you're coming in loud and clear.
All right. I'm doing well. I had some health issues with my neck. I had a pinched nerve, but doing better now. Yeah. I had a bit of
there. I've done that.
Yeah, I had a bit of a disconnected from the world for a week.
Wow.
But I think that was also nice to a bit disconnection. It was almost like this meditation, Zen environment.
There we go.
And then to basically focus
Becoming
on what matters. Yeah.
I like it. I like it. Good to hear you're feeling better.
Yeah, thank you. So I basically read the financial or the reporting from the Q1, and it was quite interesting. I think probably you discussed. I joined the stream a bit later, so I kind of missed what you have talked about. But yeah, I just wanted to say like a couple of things. And as you remember, we had a small chat on Twitter, DMs, to talk about the advertisement, and I think that was an interesting topic to mention, that this whole advertise or no advertisement is kind of ongoing discussions. And I also saw like Emmett is also quite try to really make sense out of these discussions, and also to either assess there are like healthy discussions going on or not, whether like, okay, are we going to just accept whatever Elon thinks is the right way, or are we going to put our brains in use and then think about the other cases that, as we spoke, that, hey, if the other automakers put an advertisement and then Tesla sales are increasing, maybe Tesla can do the same with the better educational videos to reach the masses. Because I think it's a game of time, right? So the faster you can reach the bigger masses, the easier it's gonna get for Tesla to go into the next level, right? Because these effects of making decisions takes time. People are gonna investigate, talk with friends. I hope that Elon is also going to consider, or Tesla team is going to consider, these options for the further growth. And I mean, at the end of the day, it's the goal is to accelerate the transition of the sustainable energy, right? If there are ways to accelerate this, why not to do it? What do you think?
Yeah, I agree. I think, I know Emmett's very staunchly pro-advertising again. I think the word advertising is very mixed by people. They think advertising means going on CNBC or going on insert TV show here and plugging in your ads, because that's what people think are ads. What I am mostly arguing for are strategic digital advertising. So Facebook ads, Instagram ads, maybe Twitter ads, who knows, YouTube ads. I mean, the largest search engine today is actually YouTube. It's taken over Google search. So, having strategically placed advertising, educating people that are already in market for car building, that's what I'm mostly arguing for. But it's neither here or there. I mean, at the end of the day, what I think the biggest thing is people, you're right. What people think, what the biggest gripe I have is that people don't think for themselves and they just take whatever at surface value and they consider it Bible. And just because you disagree with someone doesn't mean, and that person might be Elon, doesn't immediately mean that you're trying to say you're smarter than that person. It's healthy disagreements are important to have. And I think being able to mentally go through exercises of opposite sides, and actually you missed it, but in the beginning I was going through the case of not advertising, and I'm talking about how the other side and the flip side of the coin. So maybe if you want to go back and watch that later, you can. I was talking about the Cybertruck and how it's going to be a walking, living, breathing, driving advertising machine. So all Tesla really has to do is get to the end of the year when these things start to hit the road. So, but I agree. I think the bigger question is, are there better alternatives than price cuts? That's the end-all, be-all story, and that's the debate that we're having.
Yeah, and maybe we also can think about the user segmentation, right? So I think so far, if you look at the people who bought Tesla, there is a higher chance that they might be on Twitter, right? And this is like a demographics of, let's say, up to 40 years old, more like younger, high-tech crowd. So they are already on Twitter. They already know a lot about Elon and Tesla. They are highly connected, right? When you think about, I think I was just discussing with Jan EV Universe on Twitter, and then he mentioned that in the United States, it's like 80 or 85% of penetration of social media. But when you think about it, most people are not on Twitter. Most people are on Facebook, for example, right? And I don't think there's or Instagram, right? And I don't think they have quite a lot of reach of Tesla content on these platforms. Or maybe on Instagram, yes, but I'm not so sure about Facebook. So I think every mom and dad is probably have a Facebook account right now. They are poking each other and talking, I don't know, liking their cat photos, all these things. But I don't think they see a lot of content about Tesla. So, I mean, there's a high probability of gain there. And as you also said, like YouTube is also another platform that, why not to run some tests, like do A/B testing and stuff, to spend a couple of million euros and then see if your order rate increases. I mean, you don't need to spend €1 billion to advertisement, just some change, right? Tesla already losing, I don't know, $800 million for like a Chinese exchange rate. Like, why not I don't spend like $10 million for advertisement? What is like 10 million for Tesla right now?
Well, I think the bigger thing is also that people that say advertising won't work haven't read the exact slide from Tesla shareholder deck in Q2, I think last year, where they showed the day after Super Bowl and all the ads that all the EV company or the legacy companies ran for their EVs, how Tesla's order rate jumped massively that day, and the following week. So Tesla is telling us quite honestly, like, look, this makes a difference. When other people start to advertise, we start to get more orders. Well, can you imagine just the leverage that Tesla would have if they spent a little bit on strategic advertising? So, anyways, it's not the end all be all. I'm not gonna, die on this hill over this. It's not one of those issues for me, but it is one of those frustrating things where it's like, it seems like people are just waiting, and if Elon or Tesla ever come out and they say advertising is good, we're going to start to advertise now, they would just instantly flip and they would say, yeah, you know what, advertising is good. So what I want to encourage is people to think for themselves and not just agree with other people pointing at authority and saying, because this person says it, it's right or it's wrong. At least try to have your own gut and try to have your own instinct and have your own logic behind your decisions. And that's what really kind of frustrates me sometimes.
Yeah.
But
and maybe I should mention one last point about this topic is that, let's say Elon is betting big right now on FSD, right? And let's say it is close. So once the FSD is out, how are you going to make sure that it's going to reach the masses, right? I mean, if this is the biggest safe feature that any car producer has ever made, that is going to change lives, makes things cheaper and easier to access, how are you going to make sure that the masses are no? Like Dan O'Donovan is going to make a video and an advertisement about how FSD is going to kill people on a negative sentiment. But how about the positive sentiment? Are you going to let CNBC just say whatever they want to say?
You know what?
But yeah.
I am not worried about FSD spreading, and there's one big reason why. Do you know what that might be?
No.
Capitalism. When there's incentive to make money, stuff spreads by itself. FSD, once it is fully out, you have the ability to print money. And because of that, business, it works like this. Entrepreneurship will spread wherever there is ability to arbitrage for money. So when FSD comes out and you're able to have a robotaxi network, there's a lot of money to be made. And because there's a lot of money to be made, entrepreneurs will find themselves pushing that industry themselves because there's incentive to push it.
Yeah.
There's no incentive for you to buy a Tesla today versus another car other than the value you're getting, of course. But there's no like business opportunity. There's no entrepreneurship incentive there. But FSD, I'm not worried about that aspect of it. Because when there's money to be made, that will get pushed out.
Yeah. I don't know if you know, there's a company called Mr. Green in the Netherlands. There's like a cool Dutch entrepreneurs that leasing Tesla cars to the masses in the Netherlands. And they are also betting, I think, quite a bit big on the FSD, and they have all kind of like packages that you can select. And then I think that's also a really nice environment. And I really like the Dutch entrepreneurship also, thinking smart and cost efficient and sustainable in that sense. And I think they are going to also help the Tesla's penetration in the Netherlands or in the Europe in general, which is quite nice to see. I think entrepreneurs taking charge about the future.
Love it. Awesome.
Yeah.
Well, thank you, my friend, for coming on.
One last mention. You know, first when I saw the margins, I was like they are sub 20. So I was expecting the market is gonna react hard.
Yeah.
But on a second thought, I thought this is gonna be the best investment year of Tesla's, I think, investors for the upcoming months. I think this is like such a nice thing that happened, that the Tesla, the stock analysts and the big institutional investors is gonna sleep on the wheel. And we are gonna, or personally, I am gonna collect as many as shares in the upcoming times. Not as financial advice, do your own research. I'm really glad that it happens. Like these like small things, like 800 millions of FX hit, the cost efficiencies. I think Larry Goldberg was in the Herbert's channel, and then he mentioned that, you know, a lot of people were expecting that the supply chain or like costs is gonna decrease, and then Tesla can put these into their margins. But Larry mentioned that it's going to take some time also to have that effect on the supply chain to lower the costs, which means that it is going to be more reflected in the upcoming months. In the end, I'm actually quite happy. Maybe on the short term, if you have some options, in the short terms, it's bad for you. But I think on the long term, it's nice to see, and energy is also raising. Same, the costs. We were expecting 50% margins, but I think the real numbers is I think 20s or so. But still, the growth is so high potential. I think there is a lot of
exciting times. I agree.
Yes.
I mean, yes. We're always gonna have opportunities because it seems like it's always gonna dip. So
greed is increasing right now rather than fear for me.
Right on. Awesome.
All right.
Thanks, man, for coming on. Appreciate your thoughts. Take care. Shout out to Bahadir for coming on stream. Thank you, my friend. And we got our next guest, Donald Kenning. Donald, friend of the show. How's it going, my friend? Let me know if I'm coming in clear on your end.
Yeah, I can hear you. Can you hear me?
Yes, sir. Yes.
Hey. So I thought I would just chip in a couple of pennies here on advertising. First of all, people make the arguments that it's already being advertised, right? Which is true. I mean, Elon, when something happens and Elon tweets it, he's got the biggest following on Twitter, but not a lot of people may or may not be paying attention to that. And then there's what you just played, the CNBC stuff, right? And there's other like CBS, ABC, other left-leaning stuff. Whenever something happens, they report on it. So that's advertising as well, right? Like the price cuts or a new lawsuit or SpaceX launches a plane, and they talk about Tesla too, So it's all advertising, but you're getting whatever lean that they got, and I'm seeing a lot of lean against Elon and therefore the company too. Even though Elon is not the company is got a very deep bench of everyone, but few people understand that. People see Tesla, Elon, right? So and you go over to Fox, they're talking about, there's no chart. I mean, they're just misinforming people. They're saying hybrids are better and charging there's no charging anywhere and stuff like that. And you see the politicians, they talk about them too, but it's like, we need to take ownership of all this stuff, and we're going to put all these chargers out, and we'll pay for it and stuff. No, Tesla's going to pay for it, right? But also, they say they want to put like 500,000 chargers out there. Well, there are millions of chargers out there. It's called a 110 outlet. People.
That's true.
People need to be informed. And so you're saying, oh, well, Tesla has a YouTube channel and they do a 30-second thing here and a 50-second thing there. And hey, yeah, that's good advertising for people who are on YouTube watching it. If it comes up or whatever, and they got a couple of million subscribers, but yeah. So what do we do, Yassi?
Yeah, well, you can actually take those clips and actually...
And I really miss Ross, and it's all about advertising. Ross, I want you back, dude. I want you back. And
he's gone off the deep end.
Here's the thing. I think it's really easy, right? We need to flip our thinking just a little bit, okay? So everyone's saying Tesla needs to do this. Tesla needs to advertise. Tesla needs to do whatever. What if we did it? What if we crowdfunded something? Sold shirts or beer or whatever, as a, kind of a company that's not a Tesla advertising company kind of a thing. And, dispel the stuff and actually pay for the advertising. If it's crowdfunded, I'm sure a few people will chip in or, I'm guessing that'll happen. It's just there's so much misinformation. Well, I hate saying misinformation. Just people aren't informed or they are misinformed, And so, like someone earlier was saying, "Hey, there's, my wife didn't know." Oh, another guest you had, right? She was saying, "Well, we don't have charging anywhere," and it's like the 110 outlet and. There's like, you can go 20 miles and there's superchargers and stuff. So, So what about the crowdfunding? What about us taking it into our own hands if we really want to do that? If we really want to see it? If we really want to inform the public? Why don't we just do it? That's another question, right? And, you guys out there, you are already singing their songs. Why don't we just consolidate it in little 30-second spots and pay 2 cents for someone to see it on YouTube and on Facebook and whatever, I mean, I've bought ads before and it's easy, it's you just associate a advertising account with it and then you go, let's just go and do it, you guys, let's do it.
Right on.
Okay.
Appreciate that. Awesome. Hey, I like the excitement, Donald. Appreciate it. Anything else?
What? What?
Anything
else? Well, oh wait, this is glowing. Do you want me to take a look inside this?
Right. This is the thing that tells the future, right?
Yeah. Okay.
Yeah.
So
if there's anything bad about me, just skip that part.
You
yeah.
ready? Okay. Okay. So let's see. Oh, I got something in here about FSD. Do you want to hear about FSD?
Oh yeah. Yeah. Let's hear it.
Yeah. Okay. So I see everyone with hardware 3. It looks like it's going to be 4 times better. When it's first determined, it's going to be 5 times better than a normal human, and hardware 4 is 7 times better. Okay, so that's when we get it. Oh, wait, it's changing. What? Oh, now it's going through time. Okay. Hardware 3, 4 is 4 times, 5 times, 7 times, 10 times better. And then what? Oh, wait. There's more vehicles on the road that have FSD on it. So they kind of talk to each other. So the original hardware 3 being at about 4 times better is now 10 times better 5 years later. Oh my gosh. Wow. That makes for a real safe car. And it's just hardware 3. Dude, that totally rocks, man. Yeah. Wow.
Well,
and 15 times better for hardware 4. That's just
exciting
amazing.
times. Exciting times.
I'm looking forward to that. All right.
Thank you, Donald.
All right.
Appreciate your thoughts. I'll give my thoughts here in a second. Awesome. Thank you. So Donald has a lot of good thoughts. First thing I will say about the advertising, right? I don't know how I feel about spending my money on behalf of a company that has like $25 billion in cash. Like, I think this should be a corporate decision. I reckon there would be not a lot of appetite for people to want to crowdfund something for this company that has a lot of money, of shareholder money. Like at the end of the day, you're a shareholder. It's part of your money, right? By whatever percentage. So that's my first thought originally there. Man, someone said, Stephen says, Donald, can you look at my portfolio? I asked him to leave all the bad news out of it. So no. But Donald brings up a lot of good points because education is key. And the 110 outlets, like the regular outlets, is all you need to charge your EVs. And also here, I pulled up a comment for a hot second from, I think it was Kyle. He said, people need a commercial explaining charging isn't like filling up gas. It's more like a phone. Would you buy a phone if you had to leave your house to charge? Education is key. That's a great analogy. And I've never for some reason actually cemented that in my head, but I will now, explaining that to people moving on to the future, because I hear that all the time. Even the other day I was hearing about like, oh, I switched to EV, but there's not a lot of superchargers everywhere. And it's an Audi e-tron. And that's a great analogy. I'm going to bring that up. And you know what's funny is some people just don't want to spend the money of charging at home, but really the cost of charging at home is very minimal, like $25 to $30 a month added cost is what I've seen in my experience per month. So really nothing if you compare that to gas. So, but you guys know where I stand with the advertising thing. I've kind of given the argument on the other side of advertising debate as well, to a point where it's like, okay, well, Tesla can just wait till the Cybertruck. When the Cybertruck comes out, they'll have this walking, living, breathing, driving advertising machine rolling around. Tesla can get from here to that point without advertising. They can keep their moniker of fully 100% marketing free, $0 spent on ads, and continue from there. So, I guess we'll see, to be honest. RC says, was that Kyle Dunnigan? The real Kyle Dunnigan. The real Kyle Dunnigan. Should I Google Kyle? I'll Google him after. Maybe it was. Elon has tweeted about Tesla. Let me pull this up. Hold on one second. Let's end on this. I was going to watch this CNBC video, but I think I think we've already seen it. So let me pull this up. Elon has, hold on, back. So let's see here. So Tesla owner Silicon Valley tweets, our club exists to put out facts When I first got my Tesla, I never realized how biased the media was. When I actually drove the cars that were supposed to going to start a fire and the company was going bankrupt. We've been fighting FUD for almost 5 years and that won't stop. Elon replies saying, this really opens your eyes. If they're wrong about Tesla, what subject are they actually right about? Yeah, you guys don't need to know my thoughts. You guys don't need to know my thoughts about the media, but I'll keep that out of there. Alex tweeted at me, Yash, we need to change our language as stockholders, brand ambassadors. Elon Musk does not equal Tesla or SpaceX. We need to start leaving his name out of both. That's hard to do. That's going to be hard to do, as much as anyone might like doing that, just because he is the end all be all with all the tech, and he pushes everything forward. And you know, I had this poll a couple months, no, actually last year. I'll ask it here again. If Elon were to leave Tesla, let's say, from day-to-day operations, would that be good or bad for the stock? Because I swear to God, I asked this last year, and people told me that it would be good for the stock. And this was in the height of the Twitter war situation and Twitter noise and lawsuit around Twitter and all this sort of stuff. But leave in the chat, good or bad if Elon were to leave Tesla. You guys know where I stand on this, obviously. But I just don't think that's going to happen. Jay says, but if you live in Vancouver, yeah, actually, Vancouver electricity prices are very low due to hydro. That's true. That's true. I think our cost of hydro here is about 6 or 7 cents per kilowatt hour, something like that. Yeah, it's very low. And I did see a question from you as well about BYD. First of all, a couple of things with subsidies with BYD. They take a lot of subsidies in from the Chinese government, so they're able to do more low cost effective vehicles. But also, they do make gas cars as well, hybrids as well. So it's not just a pure EV play. And you guys know I have my reservations about the ability for these cars to penetrate non-Chinese markets. Of course, in China, they're doing quite well. But I'm very skeptical on their ability to penetrate non-Chinese markets still. My juju's water. Here we go. Shout out to you. Bad. He's already left it today. Bad. Okay, so this is quite the polar opposite. I asked this last October, and it was about 60% people saying it would be good if Elon left. I disagreed with it then. I'll disagree with it now. Elon is the straw that stirs the drink. Right? He might be abrasive or might rub you the wrong way depending on, type of person you are. But he is the straw that stirs the drink. Without Elon, there would be no Tesla. There would be no SpaceX. The amount of risk that you have to be willing to take, you have to be able to put yourself out there so much. You have to be able to show your employees, as a leader, show yourself to motivate people. And Elon does it in a way where he pushes the agenda forward for whatever he's pushing. And it's no easy feat, no matter what he does. So unfortunately, and Tesla might be a more mature company now, and people like Tom Zhu are coming in to the fold. But man, it's not easy to do what Elon is doing. Awesome. Okay. Well, much love. I'm going to sign off on that. It's about an hour and 40 minutes here worth of a stream. I hope everyone has a wonderful week ahead. It will be a wild one no matter what, just because there never is a normal week anymore in the stock market. So hope everyone does well. I'll continue to post out clips this week. I'll post out some original thoughts during my mornings, my morning walk videos or my morning park videos. So hit subscribe for that. If you want to continue our conversation, we have over 200 awesome folks in our Discord, on our Juju Gang Discord, that you can join with Patreon subscription or YouTube member subscription at $5 per month or more. Much love to everyone. I'll try to timestamp this video. You can go back and watch all of it. Just a brief agenda. We talked about Morgan Stanley's Adam Jonas's note. We talked about the Model Y becoming the best selling European vehicle in Q1. We did a big section about back of the napkin Tesla modeling with our Excel spreadsheet. And then we watched a couple of CNBC videos as well. All right, guys, much love. Yash signing off. Take care. Have an awesome, wonderful week. Take some time to spread some joy. Take a second to meditate. Go for a walk. Go to the gym. Do whatever you need to do to re-energize, recoup. Remember, prioritize yourself, your mental health, your physical health first. Love your loved ones. Do whatever you need to do to re-energize. Yash signing off. Have an awesome, awesome week and day ahead. Take care, everyone. And thanks to all the mods for modding as awesome as every week you guys do. Take care. Yash signing off. Peace.